Welcome back to Trading Wars, and thanks for joining me today, my friends. 13,800 on the day, over 100,000 in unrealized gains. I finally achieved my goal and broke a lot of records personally. And someone reached out to me today and said, Rich, how do I get started? What are the patterns that I need to know? What is the easiest way to get involved with trading? So I decided to make this video today, and I really hope it's going to add value to you. I'm going to be doing a lifetime Discord giveaway and a $500 cash giveaway for Christmas. So let's try to get this video for 100 likes, and just leave a comment below at the end so that you'll be eligible and I'll be picking the winner live on stream. Okay, so without further ado, let's get right into it. Okay, so I'm going to start off, guys, with the reliable SPY strategies. All right. So with SPY, you can trade both options and you can trade futures, because the price action, the S&P 500 is the same whether you're on the SPY or on ES. The only difference is ES will have the overnight price action. So I'm going to show you two examples here. This is my go-to to try to generate cash flow on a weekly basis, even on a daily basis if the setup is there. So you're going to see here I have two different calls, and we're going to walk through them right now. So let's start off here with the 600 calls. So I'm going to go back in time here. And this is my current open position on the 600 calls. So I bought them at an average price of 541, long 4 contracts, and they are at a high at 959, unrealized P&L of 1635. So almost double. And this strategy, my friend, is called the gap fill. All right. So we're going to start off with the reliable old school gap fill Fibonacci strategy. We're going to talk about the risk, reward, the entry, and the stop. Okay. So if you guys don't know, a lot of times what will happen is there'll be news in the market, maybe 8:30 a.m., 9 a.m., or after hours on the weekend. There's going to be different news. There's CPI, PPI, FOMC, etc. Sometimes it comes in before the market opens. Sometimes it comes in after, or the market can just be trending overnight. What that's going to create is a gap. Okay, so in this case right here, this is Monday, the 25th of November is when I entered these calls, and the market had gapped up from the weekend. So you could see this gap right here. Okay, so it's best to do this just looking at the SPY chart on regular trading hours, because you'll easily identify the gap. So the setup is very simple. Okay, so the gap, this gap right here, we're going to use the risk to reward tool here, is going to be your entry position right there. Okay, so the gap is considered a point of support, because everyone that missed out on this gap up is looking for a re-entry. And we could tell by the gap up that there is strength in the market. So let's just write that strength, right? Because at some point, somebody wanted this market to go higher, the S&P 500 to go higher, and that's why we gapped up. So when we come back to where we left off, that those buyers that missed that potential entry, this is their opportunity to enter. Okay, so gap fills are not always going to work, but when they do work, they have a very strong risk to reward ratio, and that's what I'm going to focus on right now. Okay, so as an example here, we can enter on the high of the candle, right, for your entry, or we can enter on the close of the candle. Either one is fine. I like to use the high of the candle here. I also like to pair this with Fibonacci, but let's just focus on the basic entry. Okay, so here's your high of the candle. And then for your stop loss, right, what you can do is use the previous level of support that you see on the chart, or if you really, really want to be conservative, you can risk the previous day's low. So in this case, it'll be all the way down here, right? So for me personally, I did not risk the previous day's low, because that's way too far for a good risk to reward ratio. Instead, I had my stop loss right below this previous area of support. I also used options in this play, right? You can see here, I bought 4 contracts. And the reason I want to use options as well is in case this went to zero. So I sized in here roughly $2,000. If this goes to zero on this trade based on my portfolio, I'm okay with taking $2,000 loss. Okay, that's less than 1% of my account. So that my sizing as well is very important in order for me to be able to take this trade profitably in the future, in case we wanted to kind of chop around a little bit. Because my sizing is on point here, I'm willing to hold through that. Okay, but if you want to use a straight up stop loss, I'd say use that previous level of support. We can see it here multiple times tested, this 594 area. Just get it right underneath those candles. Okay, so from there, let's go ahead and measure this risk to reward ratio now. Okay, so the market currently trending higher today. So my risk to reward ratio on this trade is over, it's about 6. Okay, so it's 5.97, so it's about 6. So let me just zoom out here so you guys can see. So there's the high of the day. So let's just be conservative here, and let's just say this is, let's say we get around 3. Okay, and there's a magic reason why I want to get around 3-to-1 risk to reward ratio, and let me explain that to you guys. With the 3-to-1 risk to reward ratio, okay, for every 10 trades, all right, let's write this down. For every 10 trades, you only need to win 3 out of 10 to make a profit. Okay, so let's say your risk is 100 per trade. If you win 3 trades, you're going to get 900 in profit, and you're going to lose 7. You're going to lose 700, and you're going to net $200. Okay, so everything that I do with my trading, I'm trying to get this magic number, 3-to-1 risk to reward. And oftentimes I'm actually looking for a lot more because I trade a lot of dip buying, a lot of home run Fibonacci style. My average risk to reward is above 5. Okay, but at the very minimum, in my head, if I'm not getting at least a 3 here, I'm not really willing to take the trade because it's not going to allow me to maximize my risk to reward. And I think most of you, if I would talk to a beginner, are struggling with this right here. As soon as there's a little bit of profit on the contract, let's say it's up 5% or 10%, most people are just exiting the position because they can't control the emotions. But you have to understand that if you don't have your risk to reward ratio positive, it needs to be at least 1-to-1. If it's not at least 1-to-1, the odds of you actually finishing profitable are very, very low because you're setting yourself up for failure. So let's say, for example, you have a 90% win rate and you're making $100 a trade, but on the 10 trade you lose 10,000, okay, or 2,000, let's just say, and you average down and you go crazy, you're gonna blow up your account. Okay, so I want you guys to really focus on the good quality trades, and this one here is called the gap fill. Okay, so the next thing that we're going to look at here, guys, is we're going to look at the SPY swing trading strategy that I use. Okay, and in order to do this, I'm going to swap over to the 4-hour chart, and we are going to draw this pattern up together. And I'm also going to go into the Discord so I can show you the live callouts. All right. So just want to let you guys know that everything that I show you here is my live trades. Okay. Nothing is hindsight. Everything here is documented. And I post every day in my Discord so that people can follow along on the reality of trading. It's not as simple as it looks, but when you get good trades, you get good winners. Like I say, I'm only chasing the 3 out of 10. If I get 4 or 5 or 6 or 7 out of 10, I'm going to be doing extremely well. And that's what I want you guys to focus on. Okay. So this trade was right here on the 15th of November. And I'm going to show you guys this setup here where I entered these calls. So let me just fast forward to now. So we entered the January 17, 2025 calls, 591 calls from 1314 to 2245. And that's at the close today. You could see that I post the updates here. This one started off very slow. Okay, you could see right here down $4 and then slowly grinding up. And one of the things that I'm doing with options is I'm trying to get longer dated expiry. So the general rule of thumb when you're swing trading for options, let me just write this down for you guys. 1 strike out the money and minimum 2 to 3 weeks. If you can afford it, in my opinion, I like to go 2 to 4 months. Okay, because a lot of times when you hit these good Fibonacci setups, okay, when you hit these good Fibonacci setups, you are going to have a winner that can trend, and it can trend for multiple weeks and even multiple months. Okay, so let's go ahead and draw this up. So the correct Fibonacci on this trade coming from low to high. Here's our 4-hour 618 Fibonacci. Okay, so initially, there's multiple ways to enter this, right? With the 618 Fibonacci, what we're looking for is a pullback, all right? That's what I do on the 4-hour chart. And let me just draw a few of these for you, okay? All I do on the 4-hour chart when I'm swing trading, this goes for SPY, this goes for stocks, whatever, okay, is I'm looking for a pullback using what tool? Fibonacci, because Fibonacci allows me to line up the pullback with major algorithm levels. 618 Fibonacci is my go-to. Okay, so what I'm going to do here I'm going to start off with, this was the Fibonacci in the sequence. Okay, so on the 18th of September, we made this low, and I'm going to show you how I draw fibs. Okay, so let's full screen again. Okay, so the basic pattern that I'm looking for is an A, B, C, D. So this might be a little bit advanced, but I have a full playlist on this that you guys can watch. All right, so we're going, starting from our low, we're making a high, we're pulling back, making a new high, and then completing. This is the pattern that I'm looking for. Okay, and I'm actually working on a Fibonacci bot that will basically find this pattern on all time frames for you guys. So make sure you guys drop a like and subscribe if you want that for free, because I plan to give it away for free to all my subscribers. So we're looking for this pattern. Okay, this pattern, what you'll notice is there's a pullback and a new high before we take the trade. So here's our initial push, here's our pullback, and then here's our new high. Once this new high comes in, now the next pullback is where we buy. This, the D completion, is where we buy. And the reason we do that is if you look closely here, you'll find that the D completion is generally going to be where the first pullback was. It's going to be pretty close. So this is previous support acting as support again. That's why this pattern is so effective. Okay, and I've had a very high win rate with this one. Okay, so let's draw this together. Okay, so going back to the 18th here, we have, use our Fibonacci tool, and what we're going to do here is we're going to go low to high like this. I'm going to double click and I'm just going to put on the basic, but just want you to focus on the 618. So there's the first pullback, and then here's the new high. Okay, so here is the new high right there. Here's our low, high, pullback, new high. So now the pattern is completed. And then what we do is we keep our same anchor and we move our high up to here. Okay, so now you have your pattern here. A, B, C, D. Okay, and what's very important with this pattern is this level, this area right here was a previous support right here. So not only are we using Fibonacci, but we're using the concept of previous support and resistance to increase the win rate on these trades. And what I do is, as soon, personally for me, as soon as we touch the 618, I have a conditional order to buy the calls for me right away. So as soon as it touches the level, I buy calls at the market. Okay. Or if you want to wait, you can wait for confirmation. So for example, you have an inside bar, you have a hammer, you have the Holy Grail pattern. When you see these candlesticks pausing on the level, then you can enter the trade if you want extra confirmation. Okay. So I like to call that the dragon pattern. It's an advanced Fibonacci because it has a multiple wings. So this was the one we entered into recently. And I actually got in a little bit early on this trade, right? So I ended up getting in right around, I got in on this gap down over here. And if we see going back with these anchors, this is also a form of a gap fill. Okay. So in some situations, we're not going to fill the full gap fill. Okay. This case, we had a previous all-time high. We broke the high and we retested it, right? And when you get those breaks and retests, you take your Fibonacci from low to high and you line up. You see how perfectly this 618 is lining up with the previous all-time high. So these are some of the patterns that I use on the swing trading that are reliable to me. But the basic, what I wanted to explain to you guys, buying the pullback. Okay, so if you notice, all of these Fibonacci 618s are going to be a pullback from highs. So if we come off of the high, what we'll do is we'll take the measuring tool. This pullback from high was roughly 1.5%. This pullback from highs was roughly 2.5%. And then, you know, I might as well just throw this in while we're here. So you can also take the Fibonacci of the bigger picture from that same anchor, low to high right here. And then you have one more 618 over there. So just to show you guys, it's happening all the time, right? And each time, let's measure this pullback here. This one is a 3% drop. Each time you're pulling back, what's going to happen? Especially if you're trading options. Well, the calls are going to be cheaper than at highs. So this is why I love doing this with options, because as we come back down, as we're pulling back 2-3%, those call premiums are going to be getting hit. And that's the optimal time for me to get in because I'm getting a deal. And then what we're trying to do again, well, we're trying to achieve the 3-to-1 risk to reward ratio. And this is the easiest way to do it, is starting off getting a good deal. Okay. If you buy calls at the highs, let's say you buy calls here, even buy calls right now, you're going to be paying a very pricey premium. Okay. Okay. So to summarize what we had is let's go back in time now. I want to get back all the way to my screenshots here for you guys. Okay, so we're going to go back to the beginning. Okay, all right. So to summarize, from a day trading perspective, the reliable strategies that we have, I'm going to write it down here, are gap fill and fibs. And then we also have the advanced fibs. Okay, so the second one I'm going to talk to you about right now. So the advanced fibs we talked about using on the 4-hour chart, but what about just regular fibs intraday? So this is today's price action right here, guys. Look how beautiful this is. This is the 5-minute chart. Same thing we just talked about. This is your harmonic pattern. Here's your low, here's your high, here's your pullback, your new high, and your completion right on the 618. Okay. When you're day trading, however, not only can you use the 618, you can also use the 786. The 786 now, let's go ahead and let's draw the 786 and just line it up. If you use your risk to reward ratio tool on the 786 and you use the initial low as your stop, now, oops, and let's use a target, let's say the 618 extension. Okay, so the targets are totally up to you. You can use a risk to reward factor, or you can actually use the Fibonacci extensions. So if we use the 618 extension, that's a 6-to-1 risk to reward on an intraday trade. Okay, so I'm always looking for these very clean and nice intraday fibs as well to add on to my swings and to take different hedges or different trades throughout the week. And I find these really reliable. If you get one of these 6-to-1 risk to reward ratios every 2 weeks, you have a very high chance of being profitable. Because what does this do? This 6-to-1, this 6-to-1 basically protects you for the next 6 trades. If you lose the next 6 trades, as long as your sizing is relatively the same, you can still break even after losing 6 trades in a row. Okay, which is insane. So this is why I really like Fibonacci, because it allows me to always look for the deal and the discount. And if we come off of highs here, you can see this pullback was, so intraday 0.2%. Okay, that's a lot for intraday for SPY. All right. Now this same thing can be done on futures. We're gonna go just jump over to futures real quick on the 5-minute chart. So here's the same setup on futures, right? So let's go Fibonacci low to high right here. Here's your 786. So on futures now, every point is $50. So if you don't want to trade SPY options, you can trade this on futures contracts. So let's start our 786 to the 618, about a little bit more than 22 points. So 20 points, let's round down. 20 points on one contract, that's $1,000. Okay, I have full playlists on futures, Fibonacci, all that below in case you're not familiar with it. But again, if you don't want to trade these SPY options, you got futures right there. And I also trade futures pretty heavily as well. So beautiful intraday. And now let's move on to things like stocks. Okay, so let's go back here. And let me just get my P&L back so I can show you. Okay, so let's continue. Let's go to Amazon. Okay, so for those of you that have been following me for a while, you guys know that I'm a long-term holder of Amazon shares. I have 1.3K shares now, and I continuously add my shares. So what about the strategy for investors now? What's reliable? It's the same thing, guys. If you think about it logically, buy low, sell high. It's that simple, but we overcomplicated with all the indicators and all the stuff on our chart. Okay, so that's why I use fibs, because Fibonacci lines up with the mentality of buying low, right? So here not only am I a long-term investor, but I also take swing trades on Amazon. So example, I entered into these January 17, 205 calls, right? And again, I'm using the same thing. But for stocks, I don't really day trade them as much. I mainly look at the bigger picture swing trades, and my day trading is focused on futures, S&P 500, NQ, things that can give me that quick little P&L turn for the week. Whereas these are like my core long-term positions. Okay, so here's the same situation, right, on Amazon. So we have our 618 ABCD pattern. Okay, so we start off A, B, C, D. Okay, or if you want to use the bigger picture, okay, so the first pullback, if I come from low to high, right there, okay, and then this one right here. So this is another one, and then this is the one that I entered. Okay, A, B, C, D, right on the 618. So 186.12 loading into the options, loading into shares. And then we have this nice move to the Fibonacci extension. And this for me, guys, I have some advanced entries and stop losses that I won't talk about on this video because they're very high risk. But in this trade, I made 15 times my money. So let's put that into perspective. I was talking about a 3-to-1 risk to reward. 15 times risk to reward means I can lose the next 15 trades. So I just wanted to put that out there. You can see that I have a modified approach. It's very high risk, so I'm not going to talk about it. But if you're interested, drop a like and comment below and I'll share the details with you. But anyways, so same concept here. And then after that, guys, we had another pullback. Okay, so let's just move this over to the side. Coming off of this low here, too high. So we pulled into the 618. And if you notice, we never took out that swing low. Okay, so all of these trades came very close to stopping out and then boom, turned the corner. All right. So if you're using options, okay, let's talk about that for a second. My general approach is what I put in, I'm willing to lose. That gives me flexibility to stay in the trade for a long time. When I'm trading futures or I'm trading day trade shares, I have a very defined stop loss because whenever you're using margin, you don't want to take on that risk of getting margin called. Okay. I think that's important to talk about as well because it can work. Look, it's working beautifully for me now, but when I'm red, I'm protecting my downside using stop losses when I'm using margin. And with options, what the cash I put in is the cash I'm willing to lose for me. Okay. You can have a stop. A lot of people use stop loss on options. You can. But personally, I find it easier, size smaller, put whatever I put in, I'm willing to lose and play it like that. Okay. So let's continue now. We're going to go on to NVIDIA. So similar pattern. So I just actually took this position in NVIDIA. Okay. And this is an example of something called the golden zone. Okay. So the golden zone entry is modified of Fibonacci. It's a modified entry that I actually came up with this a long time ago where I defined a range. Okay. So what I'm going to do here is I'm going to show you something. This might be a little bit advanced. We're going to put on the full Fibonacci. So these are all my Fibonacci's. You can add these to your chart. Okay. So the golden zone, okay, is from the 50 to the 786. And the reason I came up with the golden zone and the golden, concept is I actually was inspired by Earl Nightingale and Napoleon Hill and the golden principles and the golden rules and etc. And I said, all right, I'm going to call it the golden zone. So the golden zone is when you are building a position, right? So we have this area between the 50 to the 786. 50 is a 50% retracement. So 50% of the move. Okay. So for example, this move is roughly 33%. And then we're going to be pulling back down half of that. Okay. 12, 13% in order for the 50% to hit. 61.8 is 61.8% and 78.6, basically 79%. Okay. So when you're building, if you want to build a position, you enter on the 50, the 618, the 786, and your stop loss is a swing low. This gives you 3 separate trades like this. 1, 2, and 3. Okay. And why this is a powerful tool is because when you're doing this on the higher time frames, in the bigger picture, like weekly, monthly charts, etc., this can allow you to average into an investment. So NVIDIA is an example of one of the things I'm invested in. And because it may never pull back deep enough for you to get an entry, at least if you start from the 50% retracement, you're going to be able to add into the position and you layer it. So the 50% is your lightest, your 618 is medium, and 786 is your heaviest. Okay. And if you're investing, if it breaks a swing low, you can add more, or you can stop out if you're trading it. Okay. So that's the actual Fibonacci pyramid golden zone setup. Okay. And then I just want to show you guys an example of that. I'll come in here. So this was the calls I took using that same approach recently. This one's not up too much, 934 to 1215, but getting my foot wet. So if this does come lower, I have the opportunity to use the golden zone pyramid to add more. Okay. Now let's talk about an example of leaps. Okay. So Tesla, this is the daily chart. And what you'll notice again is the pattern is going to be very similar. So the pattern here, let's just make this full screen. The pattern is a Fibonacci. So this is the daily. Here's our low to high. Here's our 618 pullback. This represents a drop of 8.8%. Okay. So you can use this also for leaps. Okay. So leaps meaning if you're long-term bullish, so I'm long-term bullish on Tesla, you could see I have the 400 calls here and I have this all the way till March. So I got into this a few weeks ago. You can use that to time your entry with something like a Fibonacci to get you a pullback to get these leaps for cheaper. Okay. But the concept, what I illustrated throughout all of these examples is everything was a pullback. And I'm obsessed with the pullback because when I hit a big pullback, like Amazon is probably the best example. When I hit a big pullback like this and it works in my favor, I can make 15, 20x in the best case scenario. Okay. But 15 to 20x, guys, that don't pay for my whole year in the way I trade. So it really only takes one good trade to put me over for the year if I play it the right way. Okay. So I hope this added value to you guys. I hope this made sense. Please comment below if you want to be a part of the giveaways or if you found this video helpful. Drop the subscribe. Thank you so much for giving me your time. And I actually updated my website, tradingwars.com. If you click on the resources page, you'll see here 5 lessons that I prepared. You can download and read, and there's videos and my broker statements in there. And then I have also my Fibonacci checklist you can use when you're trading. It'll help you to stay, keep your mind in the game. My trade journal and all my hookups and my discounts and everything you guys can use there. If you guys like this video, I'm also offering a one-time charge of $100 for lifetime Discord access. All right. And you can purchase any one of my 3 books. Normally they come with 1 month for free. But if you're watching this video right now, I'm going to open this up for the next week. I think this is a video that I hope one day will become viral because this is genuine strategies that I use every day, and I really hope it can bring value. So I'm offering you guys that lifetime Discord for $100 instead of the 1 month for free. You'll get it for life. Okay. So check out my website if you're interested. Thank you so much again. And please let me know below if you found this video helpful and if there's anything else you want me to talk about. And you guys stay safe out there and take care.